Hey everyone, welcome back to Corporate Decoder, the place where we dissect those dense corporate filings. Today, we are diving into ARC Incorporated's annual report. It's a bit like unwrapping a holiday gift. You never know what surprises you might find, and this one promises a few interesting reveals. ARC is an environmental tech company. They're not building rockets, but they are focused on something just as important: cleaning up our planet. They specialize in activated carbon, AC for short, which is used to filter out pollutants from air, water, and soil. Think of it as a high-tech sponge for environmental messes. Their bread and butter is selling these AC products to coal-fired power plants, industries, and even water treatment facilities. They are targeting some big pollution problems, from mercury to these forever chemicals called PFAS. ARC has been around in different forms. It succeeded ADA's back in 2013 through a merger, and it's been growing through acquisitions, most recently buying up ARC Limited in February 2023. The demand for ARC's products is being driven by tougher environmental rules and people caring more about clean water and air. This is especially true in developed countries, but ARC sees a growing opportunity in developing nations too. ARC focuses on selling consumables, which are products that need to be replaced regularly. This creates a steady stream of business as customers need to keep buying more to maintain their pollution control systems. They face competition from companies like Norit and Calgon Carbon. What makes ARC interesting is that they control their supply chain pretty tightly. They own a coal mine in Louisiana and a manufacturing plant in Kentucky that remediates bituminous coal to produce ARC powder, their brand of microfine carbon powder. They are trying to use ARC powder to enter new markets, such as additives for asphalt, aiming for a lower carbon footprint than traditional materials. Timing is everything, even in the pollution control business. ARC sales tend to be higher in the first and third quarters, which is during the hotter and colder months when power generation and water treatment demands are up. Think of it as the environmental equivalent of selling more ice cream in the summer. Here's a key strategic point. They are developing technology to produce a particular grade of granular activated carbon, GAC, from this recovered coal. They're planning on that happening in early 2025. They think it will lower the carbon footprint compared to what their competitors are doing. They spent about $80 million on a new GAC facility and $7 million getting the Corbin facility up and running. That's serious investment, showing they are betting big on this technology. Companies have to deal with laws like the Clean Air Act and the Clean Water Act. It can cost time, money, and effort, and there's always a risk of fines if you mess up. The EPA announced final regulations establishing legally enforceable maximum contaminant levels for 6 PFAS substances. This is a big deal, and ARC is positioning itself to capitalize on it with its water treatment products. The EPA is also finalizing new rules about mercury emissions from power plants. The Mercury and Air Toxics Standards, MATS, meaning plants will have to capture a large portion of the mercury from the coal they burn. This will continue to be an ongoing factor for ARC. ARC has a bunch of patents and trademarks. They're always working on new stuff, even though they let some older patents expire. It's a constant balancing act between protecting their ideas and focusing on what's new. Employees seem to be taken care of. The business has a bunch of benefits, including medical, dental, paid leave. They've set up a revolving credit line for $30 million with interest rates tied to the overnight financing rate. The document says they used some equity to raise $26.7 million. They have been doing some shuffling with their shares, a public equity offering for $26.7 million and a private placement for $15 million. Now, as with any 10K filing, there's a bunch of forward-looking statements. Basically, these are educated guesses about the future. The document says we could see talk about anything from new environmental regulations to the demand for GAC. The company gives some statements about future expectations that are based on assumptions about coal use, the market for their products, and how well they can compete. Of course, there are risks. Demand could drop if new environmental rules aren't implemented or if the government doesn't enforce existing ones. Lower coal consumption is a risk because it might reduce the demand for their product. The company also acknowledges some internal risks, not being able to accurately report financial results or prevent fraud, which could hurt their stock price. Another potential risk is that they might need to take write-offs because of the ARC acquisition. If lawsuits get filed, the uncertainties created by litigation and reconsiderations of rulemaking, by the EPA could negatively impact the business. They rely on patents, but they could get sued for infringing on someone else's intellectual property, or they might not be able to protect their own ideas. ARC may not be able to use all of its tax breaks, like net operating losses, to lower its tax bill if they experience an ownership change. Here's a new one. A lot of investors are now focused on ESG, environmental, social, and governance issues. That could affect their stock and make it harder to get funding. The company is very focused on risk management and cybersecurity threats. They are very careful to point out what they are doing to minimize their cyber risk. Now let's take a look at those financials. At the end of the report, we see some figures. The aggregate market value of the voting stock held by non-affiliates of the registrant was $167.4 million. As of March 2025, there was 42,014,263 outstanding common stock. The company had a net loss of $5.1 million as of December 31, 2024. Cost of revenue was $69.5 million as of December 31, 2024. In 2024, the company increased cash flows from operating activities. The company saw a $27.1 million increase. So what's the takeaway? ARC is a company in transition. They're trying to grow beyond their traditional markets, but they still rely on those markets for most of their income. One concern is, like we said, the debt. Their certificate of incorporation also has provisions that may delay or prevent a takeover of the company. The biggest uncertainty might be the regulatory environment. If the government doesn't implement or enforce the environmental rules that benefit their business, ARC could struggle. The company is in a highly competitive market and must deal with reductions of coal consumption. Another potential issue is Tinuum Group, as ARC has provided guarantees for their operations. That could create liabilities for ARC in the future. On the positive side, they are very focused on ESG metrics and sustainability reporting, something that investors care about. They also focus on safety that can lead to better efficiency and fewer costs. The company's ability to use its tax assets to offset future liabilities could be limited. In a nutshell, ARC seems to be working hard to position itself for a cleaner future, but the path ahead isn't without its challenges. Their success will depend on things like regulations, their ability to grow into new markets, and how well they manage their debt. Thanks for watching. Remember to like and subscribe if you enjoyed this episode and want to support more deep dives into the world of corporate filings.